Beginning today, BOB, Dena Bank as well as Vijaya Bank are all going to be one final entity. And no, I'm not playing any April Fool's joke here. I'm sitting right here in front of Mr. PS Jayakumar, who is going to be at the helm of India's second largest PSU lender. Congratulations firstly, sir.
Thank you very
How
much.
does it feel?
Well, so starting, I mean, the whole organization is reasonably charged up. It's actually quite charged up and excited. Now with the goodwill being there, we have to now execute and make sure this amalgamation comes to life in its real sense.
You know, now that I can see all your branding, it's the power of three, it's a new entity, all charged up. I'm sure it comes with its own sets of challenges as well.
Well, yes, it does come with a set of challenges, but I think so far, well, let me put it to you this way. I'd probably try to explain it to you this way. See, there is a fair amount of excitement, as I mentioned to you, and a desire to move ahead. And it's best exemplified about branding, which says, or rather a slogan which says, "Behtar se behtrin," which it means good from good to best. And it really plays up to two constituencies. It's a promise to the customer that the new institution would serve you better than we've done before. And it's a promise to the employees that we'll all evolve into better manager and better people after this, through this period, through this process of amalgamation. And that, I think, is really both the challenge and the opportunity.
Yeah, and you know, I exactly want to talk about that, because the last big merger which happened in the banking industry was SBI merging with its subsidiaries. That process itself took about 2 years to settle down, and for, you know, all the teething troubles to settle down. You are here merging with two different banks, two different ethnicities, three different ethnicities, I should say, coming all together. Will the collaboration be tough?
I think while we are all three different institutions, quite rightly so, there is also a common public sector persona that kind of, to some extent, subsumes individual identity. That's my reading of it. Now, SBI, I'm really not fully clued into it, but SBI's merger also happened at the time when demonetization was there. They had to, for a period of time, suspend the process. It got extended, etc. For us, we have not had those interventions. It's been fairly a straight course. So I think in this period of time, which is from September to now, we have been able to get through with all the legal related work. In part, it's been because the DFS and the ministry has been extremely supportive, and also regulators, the Reserve Bank of India, have been very supportive. So as a consequence of which, we have been able to cross all these milestones quite quickly. Now, going ahead, the starting point is good. The two CEOs of Vijaya Bank and Dena Bank, Shankar Narayanan and Karnam Shekhar, have done a fantastic job in terms of being extremely institutional and then preparing the organization, respective organization, to this amalgamation. So I do think, notwithstanding the fact these are three different institutions, not like SBI as you mentioned, with a common brand name, I think we should be able to do well.
Have you done a SWOT analysis internally of all the strengths, the weaknesses, the opportunities and threats?
Well, there are different ways to look at it. For us, the opportunity really is that this amalgamation gives us both breadth and depth, which is the point I've been talking about. Breadth because we have 9,500 branches. Individually, none of us were anywhere close to that. Bank of Baroda, which is the largest, had about 5,500 branches. And so that means that our customers of ours would have access to a larger geographic base. Overlaid to the fact that the total amount of increase in urbanization is going to be something to the extent of 200 to 250 million people over the next 10 to 15 years. So the distribution and the breadth would obviously come in very handy, and that's very positive. On the depth side, the challenge we've had is that we've had a thinner management level, notwithstanding the fact we're a large bank. For instance, if we were to take any segment or any of customer, we had one or two people, senior general managers, facing against them. The corporate bank, for example, we had one person who faced all the corporates. Or in the MSME, we had one person face all the MSME segment, for example. Today, we're breaking that into 5 or 6 parts. The corporate bank, for example, between private and public and financial institutions and foreign companies, and then a bunch of other derivatives. And in the MSME, we are doing something similar with transportation, businesses, value chains, and so on. So the depth and the breadth combination, the combination of these two things, is what should propel us ahead.
So that's the strength and the opportunity. What about the weakness and the threat?
I would play less on the weakness part of it, but I think if we can, and there are obviously challenges with respect to the speed at which the technology integration would take place, challenges with respect to how the organization itself will come together. Now, on the technology side, there are two distinct parts we are working with. One is how do we make the experiences similar, and the other is the classical single core banking system. Now, to us, these two things are different. For example, we use certain kind of mobility application which makes it paperless to open, say, savings account in Bank of Baroda. It is much faster and easier to get that plugged into the Dena Bank system, or core banking system, and therefore similar levels of customer experiences can be brought in much ahead of the core banking system integration, and customers are more affected and impacted by the quality of the service. They couldn't really care where your core banking system is based. So that's the way trying to look at technology. But that said, this integration is an extremely complex exercise. Even our ability to move from Finacle 7 to Finacle 10 took us 18 months to implement. And so that challenge remains. As far as the people's challenge is concerned, the issues relating to compensation structure and all of those kinds of things are fairly easy to accomplish, in part because compensation structures are near similar, and so we're able to achieve them. Promotion policies, transfer policies of these organizations are also nearly similar. If anything, there is greater opportunity than now. The real issue in any of these amalgamation is you look 4 or 5 years hence, and you look at the next person working with, and you do not think of him as a Dena Bank person or a Vijaya Bank person. That is when we truly accomplish that. And for that to happen, we are going to make sure the system is meritocracy oriented and everybody gets an equal chance, and that is not predicated on the predecessor organization.
But you must
if we can accomplish that, I think we would be there. No, it's interaction is one thing, statement is another thing, achieving is a third thing. So I think we have to work very hard over the next 6 to 9 months' time to make sure everybody has an equal opportunity, and we begin to think about ourselves as belonging to one institution than as we belong to the predecessor institution. On the other hand, on the flip side, the positive thing is Bank of Baroda has been through many mergers like Banaras Bank, Mehman Cooperative Bank, and there are some general managers of ours today who are from this predecessor's institution, but nobody sees them as such. But those mergers happened 10 years before. So we need to achieve the same thing with a much shorter course. So to come back, I think the depth and the breadth are my opportunities. The challenges relate to the technology integration and the people management of it. With a little bit of luck and a fair amount of perseverance and a right attitude, we certainly can meet these challenges.
And how long do you think will it take you to dilute the differences between the three banks?
I hope, I cannot really put a number, but if some people say that even if I were to accomplish it in 3 years, that would be an ambitious and an extraordinary accomplishment. So we'll see. As far as technology is concerned, it's anything between 12 to 18 months to come to that. The point is, while customers today see themselves as customers of branches, when I meet customers and I introduce myself, they always say I'm a customer of Vashi branch, or I'm a customer of Matunga branch or something, or another branch. They don't talk of themselves as Bank of Baroda customers in some sense. Their identity with the branches is much more significant. And if that kind of equation holds good in Vijaya Bank and Dena Bank, then the fact is they would predominantly go back to their own base branches, and they may not necessarily look at interoperability. But within a 12 months, we are bringing in interoperability at various stages. And getting that would be important, because somebody could turn cynical and say, hey, what does this merger means? I go to the bank, which is called the Bank of Baroda, I'm an erstwhile Dena Bank customer, I don't get the similar levels of service.
What's the bank going to be called then?
The bank is going to be Bank of Baroda, that is the name, and that's by the very scheme and the act under which the amalgamation has been done.
Okay.
So I think we have a lot of work to do, but I would say we are quite charged up, and I think the mood is positive certainly, and there is a sense that we can accomplish it, and quite clearly we have got thus far because of enormous amount of support and contribution from DFS, from the Reserve Bank of India, by my two predecessors, CEOs, and also the support of board, and also a lot of well-wishers for us.
So you're the stronger out of the three banks. Can one strong bank, two weak banks equal to one strong bank?
I wouldn't try to put it in that way, strong and weak. I would say if you were to define, if you were to look at it, I think Vijaya Bank in terms of ratios is also fairly comfortable. They have been always making profit. They are one of the few banks that have distributed dividend during this difficult period. and they have a fair amount of strong loyalty in the southern base. Dena Bank also has its own advantages. So rather than try to break us as strong and weak and performing and non-performing, I would now like to think about looking at what are the strengths each of us have got and how do we get them all to play.
So as you take upon this challenge beginning today, what would you say is the key focus area? What are you going to tackle first? Is there a list in 1, 2, 3?
Well, this has always been a point of discussion. And my view has been that when you have 85,000 people working, you can surely distribute a bunch of tasks to various people and hope they would all deliver to it. So I think it's not a choice, it's probably a compulsion as well that we have to simultaneously do two things. We need to continue with the growth in our companies, in our branches, just as we focus on all the integration exercise, or as the American saying goes, you should be able to walk and chew gums at the same time.
Yeah, indeed. You know, I was reading this report by Moody's and they were saying that Bank of Baroda's profitability will lag because of this merger. How long do you think will it take you? Because Q3 your margins were also good. How long do you think will it take you to really subside over profitability now that you're a merged entity and you take on the bad and the good of both Dena and Vijaya?
Well, it depends upon what is the economic outcome. If you really believe, as many do and I do, that we are at the end of the NPA cycle and indeed in the beginning of the recovery cycle, I think we should be comfortable during the course of this year itself. But if that recovery period gets elongated, then we probably are going to have a slower return. The other way to look at it is to look at the numbers, is to say that in the first 9 months of the year, collectively these three organizations made 13,000 crores of operating profit, which is the amount of money that is available for pre-provisioning, primarily provisions for non-performing assets. That number to me seems, just on a simple mathematical extrapolation, would seem that it should be between 18 to 20,000 crores next year. Now, if there is a reversion to mean levels of losses, of which there is reasonably high probability, then we are talking about throwing up a reasonable degree of profit in the current financial year, in 1920. I'm leaving aside any potential ability to sell down assets, some profits to be booked on sale, divestiture, etc. Just talking about the core business itself. So I do think we should be coming back to a reasonable degree of profitability in this financial year collectively. There could be surprises which I have not anticipated.
Good or bad?
Good or bad. But I think...
No, that's a question. Good or bad?
Good and bad.
Okay.
But I'm just saying, as a betting person, if you are a betting person, you would rather bet that we are going to throw normal levels of profit.
I wanted to understand, what is the commonality of bad accounts that the other two banks have?
Well, it's all the same in the sense that in the corporate customer base, there is a fair amount of common customers and their behavior is pretty much, they're identical customers. In the retail and the MSME base, rather than talk about customers, we talk about score distribution. And it's a score distribution, the way the customers are distributed across the credit score band, that determines the quality of the portfolio. So that's really where it is. I think there are some obvious advantages. We need lesser number of people to focus on corporate collection because of the commonality of the account. We have some advantages in Bank of Baroda. We've got a fairly good telecalling center and a bunch of other things by which granular accounts are managed, which we can immediately come to play. We have made substantial progress, not completely, but substantial, with respect to building sophisticated early warning systems and triggers, which we can, once completed, deploy it simultaneously across all the three. So I would hope that, what I think is that in broadly speaking, as we look at the different organizations, there are, for different areas, somebody is ahead than the others. The question is, how do we take the best in class and pull everybody to that? And that's really how fast we can do that would make a difference. So that's how I put it.
So would it be fair to say that the combined entity net NPAs would be higher than what BOB reported in the previous quarter?
By definition, yes, because it's a larger balance sheet and a larger NPA. And Dena Bank, as you know, has a much higher proportion of non-performing accounts. So the 18,000 crores is becoming 30,000 crores, whereas the balance sheet is not going with the same proportion, which is why the net NPA numbers are going up. But when the recoveries start happening, the nature of the 12,000 and the nature of the 18,000 will have a lot of commonality in as much they are facing the same customer. And so the recovery cycle should help us. If on the other hand economic recovery cycle is delayed, then we could see some challenges. But again, coming back to the point, if you're making 20,000 crores of operating profit and your net NPA when you add everything together is 30,000 crores, I think there is reasonable degree of comfort in linking the problem in another year. So I think the right thing in my mind to do would to put aside this obsessive focus on the short-term returns, just focus on making that we get strategically the right things right, we get the depth, we get the breadth, we get the technology, we get the people integration, and the rest of the things will sort themselves out.
So would it be fair to say that it will be as long a wait as Q4 FY20 for the NPAs to improve?
No, I wouldn't say that. I'm just saying that you have to have a multiple scenario assumption. You cannot say this is it. It's a probability.
Assuming things remain as is and the assumptions of an economic recovery remain as is and there are no nasty surprises.
Then I think we are looking to, may not be great levels of profitability, but reasonable levels of profitability in the next financial year.
By Q4?
I'm talking about the whole of 1920.
Okay. What about total stressed assets? When do you think they will start to decline?
See, as of now, we've been focusing largely on the net NPA number because the net NPA number really represents a risk. What has been provided for and it's already reflected in the balance sheet. But that said, there is about 75,000 crores, I think, in aggregate of total stress asset. So I would think that if the recovery cycle comes well, it's not only the net NPA, but we'll get something for accounts that have been fully provided or substantially provided. So let us see, but I would say I'm broadly taking everything into consideration, the pluses and the minuses. I would think we are reasonably well placed to show a superior result in the coming financial year, notwithstanding the fact that we have a lot to do on this amalgamation exercise.
True. The government has already decided to infuse over 5,000 crore rupees this fiscal. Is that going to be enough for you? What are your capital requirements? Now that I'm guessing that with the power of 3 comes greater capital infusion responsibilities and needs as well. What would be your capital requirement for FY20?
Now, there are different ways of looking at it, but here is what it is.
Sure.
We have a capital base that is above the regulatory hurdle, so there is a certain amount of you don't want to come right down to the regulatory level, but there is some level of capital available for growth. We've got this 5,000 crores of capital that effectively gives us another 1.09% on the CET1 ratio, which currently I think is at 9.83. In addition to that, I think we can raise some additional sources of capital from AT1, from an employee stock option plan that we've got without going to the broader market, as well as the fact that the profits that we made in any year brings into the balance sheet in the following year when the audited accounts for the full year is completed, and so there will be some throwback on that. So if I were to take all of these 3 things together and just put some number around it, I would think that would add up to about 3,500 to 4,000 crores. Then there is a certain amount of divestiture one can do. So I'm thinking that if we did not get any capital for whatever reason, we still would have the ability to move forward. And we'll have to pay a little bit more attention on optimization of the asset quality as well. Coming into the 3rd quarter or the 4th quarter of this financial year, I would think we'd be able to show a reasonable degree of comfort on the growth, as well as a reasonable degree of comfort that the process of all us coming together is actually working. At which point of time the capital market will be far more open to giving us capital.
So you will require additional fundraising eventually in FY20?
But we would require additional fundraising if we want to keep a very high level of growth. But that said, it's not necessarily a precondition. Within the capital we have, there are a number of alternative strategies to look forward to. For instance, we are now putting a lot of effort on building our fee-based income, which does not require any need for capital. Similarly, you can make a lot of profit if you just build a very strong CASA portfolio. It doesn't require capital. So I don't want to add or blame or lay on the crutch of capital for growth. Growth will happen, profitability will increase. More capital might help us to propel things forward. But within the scheme, we have enough envelope for growth. That's how I look at it.
I'm going to come back to the margins point because that's what the markets will react to first thing. Your standalone margins improved in the 3rd quarter. Now with the combined entity, what happens to your margins?
The combined margin, because of a lower amount of margin in Dena Bank, but Vijaya Bank has a still much better margin than we do, would tend to be somewhat similar to where we are. But if you really look at the margin story, the issue is that our margins have been weighed down by non-performing asset. If the delta growth of asset as is currently being done comes without any dilution on account of non-performing assets, then the margin is set to improve. So that's one element of it. The other element is to look at the fee as a percentage of earning assets. In our case, that number is 0.5 or 0.6, which is considerably lower than many who are at 1.6 and 1.7. So we come back to the point that we have to focus on the fee-based growth. So that is also in some way a margin, whichever way you call it. So those are the things to look at.
There's also a lot of overlapping of branches. What is it that you're going to do with employees? Because I'm sure a merger is, numbers separate, but it's about people coming together, and I'm sure that's also a focus area for you.
No, well, there is certainly a feeling that there is a lot of sloppiness around, and then we need VRS came and we got to retire and retrench a lot of people, etc., etc. My view is, at the end of the day, we are going to be net job creators and not net job destroyers. I will tell you why. If you were to look at the number of people we have and were to take a comparable bank in the private sector, comparable in terms of network distribution and size in terms of balance sheet, you would find they have a lot more people than we do. And the reason is they've got a large number of people facing the market in terms of sales teams of various sorts. Now for us, the challenge is not about the number of people, but about reskilling people and making us much more externally oriented.
Making the ethos similar to BOB.
Externally oriented to sell. We also need a different set of people in analytics and technology, in credit cards, unsecured facility, aircraft financing, and so on and so forth, which we need to build. So when we put all of these things together, we will be net job creators overall. But except that the type of people we'd have is different from what we have built in the past. So even with our unions, have been speaking about employability versus employment and how we need to reskill the people to meet some of the significant banking changes that are happening, whether they are in the payment structure, whether the platform culture, whether it's about working with other non-industry participants, whatever be the reason, different forms of underwriting, the application of artificial intelligence and robotics into banking. So we have to reskill ourselves and
Reboot.
ourselves, and so we'll work on that. And that conversation has already started, and we have made some progress along the way. So I don't think we are bloated. Today we may have some mismatch in the type of people and skill sets we need versus the skill sets we have, but there's no particular reason to believe that issue is going to be resolved by voluntary retirement. It can be through right degree of incentivization, be done with changes to skill set. But all said and done, there's nothing that we can do over the next 6 months till we get the base architecture in terms of interoperability in technology, so that we can actually move customers of one erstwhile bank to the customer of another erstwhile bank.
So tell me, what happens to Mr. PS Jayakumar from here onwards now? A private banker at the helm of the third largest lender now. Your term comes for expiration, if I'm not mistaken, October itself. Is there planning for some more extension? If that extension is offered, are you going to take it up? What happens?
We'll come to all of these things when at the right time, but I think logically speaking, our role is essentially to build an institutional structure where processes take precedence and the processes ensure appropriate succession plan, stability of growth, etc., and it's not people dependent. People will come and go, organizations continue.
Is that a hint?
And our role of no, it's not a hint. I'm just talking about our role is to build it. We'll see in October. I'm not unreasonable in wanting to make sure this institution succeeds. I don't think the government particularly has, would necessarily say no. It would all depend at that point of time at what choices are there and who's the best choice at that point of time. But personally, it's been a rewarding experience for me, and I'd be very happy if we continue to work building systems and processes, so there is really no need to talk about individual persons. And quite frankly, while one gets the benefit of all the good things that have happened, this is really a teamwork. I really mean it. And I do probably end up sometimes getting more credit than what is due. And there are enough number of good people who actually carry the work, and they will continue to carry the baton regardless of who is the CEO.
So you're willing to
see the
baby grow?
I would put it to you, I think let's make the right decision at that point of time.
Okay, great speaking with you and good luck for that.
Thank you.
Thank you so much for
Thank you
speaking
very
with us.
much.
Thank you.